Hey, good evening traders, it's Mark here. I'm going to do a slightly different video for you this evening. We're going to take a look at the correlation between gold and silver and which market should we potentially look at buying as we approach a seasonal period where we should be looking to potentially be buying these precious metals. So the chart I've got on right now is gold divided by silver. So what does that mean? Essentially, it's just it's like looking at a normal chart, euro dollar, or gold against USD, or silver against USD, except what we've done is we've paired it. So we've put gold as a ratio against silver. So in this instance, as gold is the base currency, as the market goes up, that is gold getting stronger than silver, and if the market was to decline, that would be silver getting stronger over gold. So as you can see in the top left over here, we have gold as the base and silver as the quote. Now this isn't a chart that many of you will look at, but as you can see, over recent months or over the last year or so, we have seen that gold has been outperforming silver, its fellow counterpart. So what does that mean? Well, if we are approaching a time where we expect precious metals to rally based on seasonal analysis, and we see that this expanding channel, this rising channel, which should potentially start to pull back down in towards the bottom part of the channel, maybe even break it, but let's not go that far. Let's just work on the fact that we should see it rotate lower back towards support. Then that would mean that we are likely to see silver appreciate quicker than we are gold. So now let's take a look at some seasonal analysis. I'm just going to move over a gold seasonal chart. So if we have a look right now, you can see that as we approach this period here we are in July, you can see we tend to have an appreciation of gold going up for the next couple of months, and we can see that based on a long-term seasonal analysis and over a weighted average being the gold one, which basically just means that it's more weighted to recent years as opposed to over the entirety that data has been collected. So we can see that through this period, this is an area where we would essentially like to be looking to be buying gold based on seasonal data. Obviously, we don't just go ahead and buy because the seasonal analysis said so, but what we will look for is an area of interest where we can use it for a timing tool. So it is a timing tool where we could look to basically buy gold, but obviously we need to see our technicals align with such, where we can see that come into play. Now I'm going to bring across the July, well, the seasonal chart for silver, and you'll see that we have effectively a very similar sort of timing tool that is telling us that we want to be a buyer around July, and we see that very strong impulsive move right up until first week of August, into the middle of August, and then we get another push, whereas gold was more of a continued move. But you can see that silver is definitely in alignment, both longer term and short term. Looking at the blue and yellow seasonal lines, you can see that through July they are definitely in line with each other. So the seasonal period is definitely a strong one that we can look for. Now, based on what we're seeing here with the gold to silver ratio, I suspect that silver should give us a better opportunity, or should at least see us seeing a better return should the market set up, based on the fact that we should see gold depreciate over silver. So let's take a look at the gold and silver charts, because they have been getting hammered recently, and are we in fact at a technical point where we could be looking to buy them? Because that's the next question. We've got the timing tool set up. Now if we were to select one chart over the other, based on what I'm seeing on the gold versus silver ratio, I would rather be trading silver long as opposed to gold long, but we still need to see both of those markets set up. So let's take a look at gold. Well, gold has been in meltdown. We've seen just this last couple of days from 1814 down to 1735, so it's dropped best part of what, $80, $79, $76 in just under 2 days. So it's a big move, but where would we really want to be looking at buying gold if we were thinking of it from a technical perspective? Well, if we bring our cursor down into this area here, you can see that around 1700 even handle, that would probably be a really nice area to start looking for the move. So we've got FOMC minutes coming out shortly. We could see another surge for some dollar strength, but the dollar to me is looking very top heavy, and I don't want to be buying dollar just yet. Our analysis videos the other day showed you how we would like to have been selling the dollar, but we needed to wait for a couple of things to happen. So, for example, when we looked at the euro, we needed to see if we were going to go long, we wanted to see it above 106, and if we were going to go short, we wanted to see it go below 104s, or 103.80s to be precise, which it's done that. So there you got your confirmation by waiting for an if done scenario. So gold, you could argue that we are in an area of interest somewhat based on the weekly chart. If we go down to the daily, I'm just going to zoom in. Sorry, I'm a little bit full of cold at the minute, so I do sound a little bit Barry White-ish. Let's just remove this off. There we go. So we can see that our zone in and around this area for gold, call it the 1700, is where I'd be interested. But if we look at the previous swing lows over here at 1730, we could see the market rebound off this area. So we're in an area of interest, but we're not seeing anything that would warrant purchasing gold right now. We need to see the market shift, and we need to see that market sentiment change. So preference would be to see the market come down into 1700, but 1730 we could see something happening. Moving over a little bit more to a smaller time frame still, you can see we've seen these periods of consolidation, then a break and a continued move. So my preference lays with a move down into 1700, and then I would look to see some market sentiment shift like this, and then we can start looking to see the market move to the upside. Very simple. This area consolidation, the market's broken, continued to move lower. Up here, you know, unless you're just day trading, it's not something that I was interested in either going short or long, but I would need to see the market come down into this area to look for some nice long-term or mid-term speculative buys. Now, if we go over to silver, you're going to see something slightly different. Silver's not been as punished today. You can see silver's only down, well, it's up slightly on the day, whereas gold's down 1.7%. So looking at that gold to silver ratio that I was talking about, you can see that gold is actually getting sold off quite aggressively today compared to silver. Now, if we go over to the weekly chart, I want to show you a couple of trend lines that are of interest when it comes to looking at where we could see silver potentially find a base. So I'm just going to keep zooming out a little bit more, and then you'll see exactly the points that we're looking at. So from a longer term perspective, I'm going to go all the way back to 2012, these lows back here in 2012, and use it as an anchor, and you'll see the anchor price that I'm looking at is just through here. And oh, sorry, there's a little bit of a delay going on. I'm just gonna turn something off that's running in the background to see if that can speed things up a little bit. Right, okay, there we go. So what is an anchor? An anchor is this little section here where we can see the swing low is keeping this trend line in place with where the market has retested here. Then we've seen another retest here, and now the market is back above. So could we see price push down into the even handle $17 for silver? So we could see there's still room for a little bit of a move lower for then the market to push up. So $17 is probably the furthest I could potentially look to see this market move. The next area, or one that's a little bit closer to current market price, will be if we just connect these swing highs here, which you could argue it's going to be anywhere in around 18.5 down to $18, where we could look for the market to potentially reverse. So This is just looking at more recent swings. So we've got rejection, 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 then we have the break above. Now we potentially see the retest. So it's what happens when the market retests. I'm not just going to go ahead and buy it blind, but these are the things that we're going to look out for. And if we can get a rejection of around $18.50, $18, then we can look at this as a nice mid-term play where we can be looked to scale out sort of mid-August, first couple of weeks of August, at least take something off the table, and hopefully we can get a nice big move on that. And according to what we see in terms of the gold to silver ratio, we should see, if there is going to be an appreciation, we should see it a lot faster in silver than we will in gold. So that's my forecast and why we're going to be looking at those markets and why we'd pick silver over gold. But let me know your thoughts. If you've enjoyed this content as something slightly different, please let me know why. Let me know below. If you've got any other questions about correlations, cot analysis, day trading, scalping, you name it, comment below and one of the team will answer your questions. Look forward to seeing you in tomorrow's video. Good night, guys. Bye bye.